Hey everyone, welcome back. Make sure you hit that subscribe button and the notification bell so you don't miss out on any of our future deep dives. Okay, so today, we're diving deep into a topic that's crucial for anyone trying to crack competitive exams like the UPSC. But honestly, it's also just really important for anyone who wants to be more financially savvy, India's banking sector.
That's right.
Whether you're a student hitting the books or just someone who wants to feel more confident managing your money, this one's for you.
Absolutely.
And we've got this awesome study guide as our roadmap today. It's packed with insights, definitions, historical context, even some juicy comparisons between different types of financial institutions.
Right.
Ready to unlock the secrets of India's financial system?
Absolutely. Let's do it.
All right, let's break down. Starting with the most fundamental question, what is money, really? Our study guide does a great job dissecting this, talking about its primary, secondary, and even contingent functions.
Yeah, it's so much more than just those rupees in your wallet.
Right.
Money's a medium of exchange making, buying and selling so much smoother than bartering ever could.
Right. It's like a universal language that everyone in the economy understands. And then there's that unit of account function where money helps us measure the value of things, so we can tell how much that fancy coffee is really worth compared to, say, a bus ticket.
Exactly. That ability to compare values is what allows us to make informed decisions about spending, saving, and investing. And of course, we can't forget money's role as a store of value.
Ah, yes. That hope that our hard-earned money will be worth something tomorrow. That lets us save for the future, that dream vacation, the down payment on a house.
Exactly. And beyond these core functions, money also paves the way for loans, mortgages, the whole credit system, which, as you know, is essential for economic growth.
And that's where banks come into the picture, right? They're not just those grand buildings where we deposit cash. They're the key players in this whole money system.
Absolutely. Banks are like the connectors. They link people with extra money to those who need it for investments or big purchases. And while they're at it, they create new money through this really fascinating thing called the fractional banking system.
Okay, now, this is where things get super interesting. Our source material explains this money multiplier effect with a cool analogy. Imagine a bank keeps 10 rupees as reserves and lends out 90. That 90 rupees gets deposited into another bank, which then lends out a portion of that, and so on, creating this ripple effect throughout the whole economy.
Yeah, it's like money magic.
That's amazing, right?
And it's crucial for stimulating economic growth. But of course, it requires a watchful eye to make sure things don't spiral out of control.
Which is where the RBI steps in, the guardian of India's financial system.
The Reserve Bank of India, established back in 1935, it's the ultimate authority when it comes to money matters in India. It issues currency, manages those vital foreign exchange reserves, and above all, makes sure the banking system is running smoothly.
Yeah, it's like the RBI is the conductor of this massive orchestra, making sure all the instruments are in tune and preventing the music from turning into chaos.
Yeah.
And get this, the RBI even has subsidiaries, like the DICGC, which basically ensures your bank deposits. So even if something unthinkable happens, like your bank goes under, your hard-earned money is protected up to a certain limit.
Yeah, that's pretty reassuring.
Very reassuring.
Absolutely. And beyond its regulatory role, the RBI is deeply involved in promoting financial inclusion. It's committed to bringing banking services to everyone, especially those in rural areas who might not have had access before.
That's so important. And speaking of things that directly affect us, the RBI publishes these reports that are actually super helpful for everyday people, like the Banking Service Index, which tracks how much we're paying for things like transferring money online or using our debit cards. It's all about transparency.
Right. The RBI's actions, whether it's setting interest rates or promoting financial literacy, have an impact on everyone's lives, even if we don't always realize it.
Speaking of impact, let's shift gears and talk about this often mysterious thing called monetary policy. It might sound intimidating, but at its core, it's the RBI using its tools to guide the economy, to keep inflation in check and encourage healthy growth.
Exactly. It's a balancing act, trying to keep all those economic balls in the air at the same time. And to do this, the RBI has a whole set of tools which our study guide explains really well.
Yeah, it's got these quantitative tools like the repo rate, which is the rate at which the RBI lends money to commercial banks. Think of it like this lower repo rate means cheaper borrowing for banks, which usually leads to more lending to businesses and individuals, and that can boost economic activity.
And on the flip side, if the economy starts overheating and prices rise too quickly, that's inflation, the RBI might increase the repo rate, making borrowing more expensive and trying to cool things down.
It's like a gas pedal and a brake pedal for the economy. Then there's the reverse repo rate, which is the rate at which banks can park their surplus funds with the RBI. And the CRR, or cash reserve ratio, which is the portion of deposits banks have to keep with the RBI. It's all about managing the flow of money in the system.
It's like a constant juggling act, but it's absolutely crucial for maintaining stability and preventing those wild economic swings that nobody wants. And the RBI's toolkit doesn't stop there. They also use qualitative tools like margin requirements, which influence how much banks can lend against specific assets.
It's like setting boundaries to make sure everyone plays fair. And then there's this fascinating tool called moral suasion, which is basically the RBI using its influence to gently nudge banks in a certain direction. They might encourage them to lend more to priority sectors like agriculture or small businesses, or advise them to be cautious in areas where there's a risk of things getting out of hand.
Yeah, it's a more subtle approach, but it can be very effective in guiding the overall behavior of the banking sector.
So we've got this powerful central bank setting the stage. But the landscape of India's banking sector itself is incredibly diverse. It's not a one-size-fits-all situation.
Definitely. We have a whole array of players, each with their own distinct roles and functions. There are those familiar commercial banks, the department stores of finance catering to businesses and individuals alike. Then we have cooperative banks, which are deeply rooted in local communities, particularly in rural areas, focusing on things like agricultural lending.
And let's not forget development banks. They play a vital role in financing those long-term projects that build up the nation's infrastructure, roads, power plants, ports, you name it.
Exactly. And then there are those newer, more specialized players like small finance banks, which are designed to cater to the needs of small businesses and communities that haven't always had easy access to financial services. And payments banks, which are focused on simplifying digital payments and remittances.
It's like this bustling financial marketplace with something for everyone.
And that's precisely why understanding these nuances and the differences between these types of banks is so important, especially if you're new to the world of finance or studying for those competitive exams where this kind of in-depth knowledge can really make a difference. Choosing the right bank for your specific needs can make a huge impact on your financial journey.
Absolutely. It's all about finding the right fit. But amidst all this diversity and activity, there's a shadow lurking that we need to address.
Yeah.
The issue of NPAs, or non-performing assets.
Yeah. Yes, the dreaded NPAs. These are those loans that have gone bad, the ones that haven't been repaid as agreed. And they can really weigh down a bank's financial health and even pose a risk to the stability of the entire system.
It's a challenge that policymakers and regulators are constantly working to address. So, in our next segment, we'll delve deeper into the causes and consequences of NPAs, and we'll explore some of the strategies being used to tackle this problem. So stay tuned.
Welcome back. Before we get to those NPAs, I think, it's worth highlighting a few more initiatives that are really shaping India's banking sector. Our study guide points out some interesting examples like the lead bank scheme, which has been around since 1969.
Oh, yeah. The lead bank scheme. It's all about ensuring that even people in rural areas have access to banking services, right?
Precisely. The RBI designates a lead bank for each district, usually the one with the most extensive branch network in that area. And this lead bank takes charge coordinating with other banks in the district to make sure those rural communities have access to credit and other financial services.
It's like having a dedicated point person to ensure that nobody gets left behind financially, even in the most remote parts of the country. Pretty smart. And speaking of expanding the reach of financial services, our source material also talks about non-banking financial institutions, or NBFCs. They seem to be playing a more and more important role these days.
NBFCs are kind of like the agile cousins of traditional banks. They offer a wide range of financial services, from loans and investments to insurance and asset management, but they often focus on niche markets or segments that traditional banks might not fully serve.
They're like the specialized boutiques in the financial mall, offering something unique and tailored to specific needs. But they still have to play by the rules, right?
Absolutely. The RBI keeps a close eye on NBFCs to ensure financial stability and compliance. Our study guide actually draws a clear distinction between banks and NBFCs, highlighting those key differences in their functions and the regulatory frameworks that govern them. For example, NBFCs can't accept those everyday demand deposits like checking accounts that we're used to with regular banks.
It's like a whole parallel financial universe operating alongside the traditional banking system. And it gets even more complex with specialized NBFCs, like core investment companies or CICs, which primarily focus on acquiring shares and securities. It's a lot to keep track of.
It is a complex landscape, But understanding these distinctions is really important, especially if you're looking to navigate the financial sector effectively. Particularly for those aiming to ace those competitive exams. It's all about demonstrating a thorough understanding of the nuances.
Right. Knowledge is power.
Uh-huh.
But now, let's face those shadows we talked about earlier, the NPAs, those non-performing assets that can really take a bite out of a bank's balance sheet and even threaten the health of the whole financial system.
NPAs are a serious issue, and one that India has been grappling with for a while now. It's a topic that often makes headlines, so understanding the different strategies being used to resolve these bad loans is crucial. Fortunately, our study guide provides some great explanations of the tools and frameworks being used.
One that jumps out is the Sashakt plan. It sounds like a superhero team assembled to rescue those stressed assets.
That's a great way to put it. The Sashakt plan involves something called an intercreditor agreement, which basically means that different lenders come together to work out a solution for these troubled loans. It's a collaborative approach to prevent those bad loans from dragging down the entire system.
Strength and unity.
Yeah.
And then there are these specialized entities called asset reconstruction companies, or ARCs. They're like the cleanup crew for the banking sector.
Exactly. ARCs specialize in buying those MPAs from banks, usually at a discount. And then they try to recover as much value as possible from them. They might restructure the loan, sell off assets, or even take legal action to get as much of that money back as they can.
Our study guide even mentions a specific law, the Sarfazi Act, which provides the legal framework for ARCs to operate in India. It really shows how seriously policymakers are taking this issue of NPAs.
Absolutely. And there's another important legal tool in this fight against NPAs, the Insolvency and Bankruptcy Code, or IBC. It's relatively new, but it's had a significant impact on how businesses deal with financial distress.
The IBC is all about streamlining the process of resolving insolvencies, right? No more of those endless legal battles.
Precisely. The IBC aims to find a resolution that works for both the creditors, the ones who are owed money, and the debtors, those struggling to repay. It's about finding a fair and timely solution rather than letting things drag on forever.
So it sounds like India has been quite proactive in implementing reforms to tackle these NPAs. But wouldn't it be better to just prevent them from happening in the first place?
You're absolutely right. Prevention is always the best medicine. And that's where things like strengthening risk management practices within banks, improving credit appraisal processes, and ensuring greater transparency in lending come into play.
It's about building a more robust and responsible lending system from the ground up. And speaking of building a stronger foundation, our source material mentions these international standards called Basel III.
Ah, yes. Basel III. It's like a global rule book for making banks more resilient, better able to withstand those financial shocks that can really shake up the whole system. It focuses on things like ensuring banks have enough capital, improving risk management practices, and enhancing those liquidity standards.
So it's like building those financial shock absorbers, helping banks weather the storms. But reforms aren't just about fixing problems. They're also about driving positive change and innovation. And our source material highlights a great example of this, Mission Indradhanush.
Mission Indradhanush is a 7-pronged plan aimed at giving public sector banks a much-needed makeover. It focuses on improving governance, making them more efficient, and boosting their financial health. It's really comprehensive, tackling everything from appointing the right people to the boards to ensuring they have enough capital to operate effectively.
It's like a complete fitness program for these banks,
Yeah.
getting them in shape to face the challenges of the 21st century. And speaking of the 21st century, we can't talk about innovation in India's banking sector without mentioning the digital revolution that's happening right now.
It's incredible how platforms like UPI and BHM have transformed the way people in India make payments. They've made transactions so much faster, easier, and more accessible.
It's like everyone has a mini bank in their pocket.
Exactly. And this digital revolution is playing a crucial role in financial inclusion, bringing millions of people who were previously excluded from the formal banking system into the fold. It's a huge step toward a more inclusive and equitable financial landscape.
And this trend is only going to accelerate, right?
Yeah.
With all these fintech startups, mobile banking apps, and online lending platforms, it feels like the future of finance is digital.
It certainly feels that way. India, with its young tech-savvy population, is well positioned to be a leader in this digital transformation. And as we move towards more digital economy, understanding these trends becomes crucial for anyone navigating the financial landscape. Whether you're an aspiring entrepreneur, a student gearing up for exams, or just a savvy consumer.
Speaking of trends shaping the future of finance, There's one that's creating a lot of buzz and even a bit of controversy. Cryptocurrency.
Ah, yes. The world of cryptocurrencies. It's a space that's both fascinating and a bit of a wild west, filled with both potential and uncertainty. While our source material touches on the basics of what cryptocurrency is, it doesn't delve too deeply into the potential impact it could have on the banking sector, especially here in India.
It's like this whole new frontier in finance, and one that's definitely worth exploring further. So let's shift gears in our next segment and venture into the world of blockchain decentralized finance and the potential for a financial revolution in India.
It's a journey into the unknown, but I think it will be insightful and thought-provoking. Stay with us.
Okay, so we're back ready to tackle this world of cryptocurrency. It's a topic that's both exciting and a little mind-boggling, wouldn't you say?
It definitely is. It really challenges how we traditionally think about money and finance. Our source material defines cryptocurrency as this digital or virtual currency that uses cryptography for security. And what sets it apart is that it operates on this decentralized network called blockchain.
Decentralized, meaning there's no central authority controlling it, right? No government, no central bank calling the shots. That's pretty different from the financial systems we've been talking about.
Exactly. That's what makes cryptocurrencies so appealing, but also challenging. They offer this whole new way of thinking about value and transactions.
And there's so many cryptocurrencies out there. Bitcoin, Ethereum, Litecoin. I even remember that whole thing with Facebook trying to launch its own cryptocurrency, Libra.
Yeah, Libra faced a lot of resistance from regulators around the world. Which brings us to a key point. The rules and regulations surrounding cryptocurrencies are still evolving both globally and here in India.
So where do things stand legally in India? Are cryptocurrencies allowed or not? It's a question I hear a lot.
It's a bit of a gray area, to be honest. Right now, cryptocurrencies aren't recognized as legal tender in India. That means you can't use them to pay your taxes or buy groceries at the store. But the government is exploring different approaches, trying to find that balance between encouraging innovation and protecting consumers and the financial system.
So, it's a wait-and-see situation for now. But even with all this uncertainty, it's clear that cryptocurrencies are making a splash in the financial world.
Absolutely. One of the most interesting developments is this concept of decentralized finance, or DeFi. It aims to essentially recreate financial services, like lending, borrowing, trading, but without those traditional middlemen like banks.
DeFi. It sounds so futuristic. How does it actually work?
The key is these things called smart contracts. They're basically self-executing agreements coded right onto the blockchain. Imagine you want to take out a loan, but instead of going to a bank, you use a DeFi platform. The terms of the loan, the interest rate, the repayments, those are definitely valid concerns. DeFi is still in its early stages, and there are risks. What happens if there's a bug in the code of a smart contract? Who do you turn to if something goes wrong? These are questions the DeFi community is still working through.
It sounds like a high-risk, high-reward scenario. But there's no question that cryptocurrencies and this underlying blockchain technology have the potential to really shake things up in finance.
Absolutely. Even if cryptocurrencies themselves don't become the main currencies we use, the technology behind them, blockchain, is a game changer. It has so many potential applications. Tracking goods in a supply chain, securing digital identities, even casting votes in elections.
It's like a tech Swiss Army knife. Could we see blockchain being integrated into the traditional banking system? Or will these two worlds always be separate?
I think we'll probably see these two worlds merging, blanks. Banks are already experimenting with blockchain to make their operations smoother and more secure. They're exploring how it can streamline cross-border payments, reduce fraud, and make things more transparent.
So it's not about one replacing the other, but more like a blending of the old and the new.
Exactly. The
Yeah.
future of finance is likely to be this hybrid model, combining the strengths of both.
It's definitely an exciting time to be witnessing this evolution. And I think our deep dive today has given everyone a really solid foundation for understanding not just the nuts and bolts of India's banking sector, but also these emerging trends that are shaping the future of finance.
I agree. We've covered a lot of ground today, from those basic functions of money to the complexities of the RBI's monetary policy, from tackling those tricky NPAs to the rise of digital payments, and even venturing into that uncharted territory of cryptocurrencies and blockchain.
It's been an incredible journey. And I think the biggest takeaway for everyone listening is this isn't just theoretical stuff. These concepts, these trends, they have a real impact on all of us.
Absolutely. Whether you're a student prepping for exams, an entrepreneur looking for funding, or just someone trying to manage their personal finances, understanding how the financial system works is so important. It helps you make informed decisions and navigate this complex world.
Financial literacy is empowering. So, to everyone listening, stay curious, keep learning, and embrace this dynamic world of finance. Who knows? Maybe one of you will be the next innovator to revolutionize the way we think about money.
That would be incredible. Thanks for joining us on this deep dive into India's banking sector.
And that wraps up our deep dive for today. Don't forget to like, subscribe, and hit that notification bell so you don't miss out on more explorations of fascinating topics. Until next time, keep those minds curious and keep exploring.